See, the thing is, once it gets to a demand area and it's that low on the RSI, it's gonna turn up. Every time it's a pandemic, Clorox shoot the fuck up. Look, it was undervalued on the RSI, it shot up. See, the main thing is their net margin is increasing. Net margin is 33%. That's high as hell. Click. Hey, what's up, man? Hey, today I'm finna go over the most undervalued companies that's diversified between consumer durables, transportation, retail trade. We got some healthcare in here, and we also got another packaged software company. First thing first, we're gonna start with Clorox, but first thing first, I wanna say I'm not a financial advisor. I'm just giving out some entertainment and some information that you can learn from about the stock market. So let's get into it. Today we finna go over nothing but technicals for real, because since it's 5 stocks, if we go over more than technicals, this shit gonna take 30 minutes. But the first thing we're gonna go over is the RSI on the monthly, weekly, and daily. And y'all gonna see the benefits of using the RSI. We're going over resistance and support. We're going over demand areas. But we also need to cover financials, news, current events, investor relations. We need to understand the company. We gotta go over the SWOT, the moat, the fundamentals, and the leadership to really get a solid understanding on if it's good. But since we're only going over technicals, I'm finna circle and mark a whole lot of shit up that's gonna make a whole lot of sense. But first thing first, we're gonna start with Clorox, just because Clorox so undervalued on the RSI on the weekly time frame, and it's showing divergence. And every time it's a pandemic, Clorox shoot the fuck up. Let's go back before COVID. Let's see, 2018 Clorox was $115, and they shot up 106% due to COVID. They're back at this demand area. We're going over demand areas. They back at this demand area. Every time they got here, you see how they reacted once, twice, third, 4, 5, 6, 7. 7 touches of confluence. It's also on this 200 EMA right there. It's riding that 200 EMA on the monthly. It's low risk. It offers low risk as well. It's a low risk for Clorox to fall below this demand area, because they've been bouncing here the past over 6 times. But look, it's less than a 20% risk with over a 30% profit return. We're gonna go to UPS. Let's start with UPS. UPS, my favorite, the biggest shipping company in the world, and the most undervalued, and the biggest shipping company in the world. But we can mark it up and we can look at the area of confluences and how many times it reacted to this level. And we can just see the trend, because it's all about statistical trends. If a pattern happened, a pattern gonna happen again, most likely. 1, 2, 3, 4, 5, 6, 7. Look, it was undervalued on the RSI. It shot up. Now it's here again. Not only is it undervalued, but it's at this demand area. So that offers low risk, but it offers a high reward. All right. Then we got Copart. Copart is at this, I should go on smaller time frames too. But the monthly time frame, the higher the time frame, the better. UPS 20% risk for 46% return. Copart is setting up beautifully with the 200 EMA as well. Look, let's start making some circles and look at the statistical trends and patterns of Copart. 1, 2, 3, 4, 5, 6. Let's see. Damn. 7, 8. It reacted a lot beautifully to the 200 EMA since 2011. So over a decade, it's been going in this same pattern and trend. and it's undervalued, and it's most. See, the main thing is their net margin is increasing. Net margin is 33%. That's high as hell. They're undervalued. They're following a trend since over a decade ago. So it's a very strong trend. They got a lot of good things going on. So this another one to put on your radar and to watch, but you know, just put on your radar. I'm basically a stock screener. I screened all these stocks and I'm gonna show y'all the best ones. And it's up. Copart 14% return for 26%, well, 13% risk for 26% return. For y'all to do the rest after I show y'all the technicals. Next, we got VERX, VERX right here. It's at this demand area, but it's also oversold very heavily on the weekly time frame. Yeah. Let's see if it's holding. It also has a gap to fill up there. It's holding this as well, barely. But yeah, they're growing as well. Their revenue is growing, assets are growing, operating income is growing. That's great. Analysts expecting them to go up as well. VERX, look, 13% risk for over 42% return. This is the last one on the list, healthcare. Let's see. Okay, look at that on the monthly. This is probably the most beautifulest monthly chart. This is the most beautifulest textbook monthly chart ever. This is a chart you see a picture of in the textbooks about stocks. But look, 200 EMA, perfect bounce on the 200 EMA hold right here. Check this out. This is how it reacts once it gets to that level. See, the thing is, once it gets to a demand area and it's that low on the RSI, it's gonna turn up. It's gonna turn up. And you're gonna, if it's a good company. Like if their revenue is growing like this, and it's following a statistical trend like this, it's gonna turn up. But yeah, those are five, let's see, 1, 2, 3, 5 good companies to put on your radar. And that's the technicals behind it. So 30% risk for 50% plus return. So those are some 5 low risk, high return companies with growing revenue, that's undervalued, that's big as hell. And let me know what y'all think. If it's better ones out, let me know. And I'm gonna check them out, cause yeah, I'm about to start pouring some funds into those. And if y'all like the video, hey, read the board, and appreciate y'all for tapping in for sure.